For the first time in what feels like forever, we can finally see a little bit of a jump up in the share price for Nike. On the day, they were up close to around 7%, and they finished the day trading at $86.52 per share. But to put things into perspective, over the past year, still down around 8.5%, and year to date, down over 20%. And we can see right here is where they released their most recent quarter's earnings report, and the stock saw the largest single-day sell-off in company history, going from $94 per share all the way down to about $75 per share. And since then, the share price has continued to go lower, and it's gone up a little bit since then, but again, this is the biggest jump up we've seen in a while. Now, what was the catalyst behind this? Well, if you've been paying attention, Nike just made a major move with their management team. They're going to be changing CEOs. If we scroll down, we can see right here, Elliott Hill will return as president and CEO effective October 14th, 2024. So that date is coming up pretty soon. And if you're not familiar with who this is somebody that's already had senior leadership positions throughout the company across Europe and North America during his tenure. And if we scroll down a little bit further, we can see this transition comes as the former CEO, John Donahoe, has decided to retire from his role. Now, to be completely transparent, I don't actually think that's what's happening here. Shareholders were not happy with John Donahoe's performance. They really feel like the Nike brand was eroded during his tenure. And as we'll see in a little bit, it does look like that's what's happened. So shareholders are really excited at this news. Excited enough to actually drive the share price up quite a bit. If we look at the past 5 days, the stock is up about 8.44%. Now, we have a lot to dig into, but first, let's go ahead and look at them from a dividend perspective. One of the things we have to understand about Nike, if we come up here and plug in the stock ticker, and like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But like I was saying, we can see Nike, historically speaking, has been a pretty good dividend growth stock. The starting dividend yield is a little bit low. It's sitting at about 1.71%. But this is something else I want to put into context. If we jump back over to Seeking Alpha and look at how the dividend yield has changed over the past few years, we can see right now their starting dividend yield is pretty much the highest it's been in the past 5 years. For the majority of the past 5 years, their starting dividend yield was below 1.5%. And if we zoom out to 10 years, we can see it's even the highest starting dividend yield they've seen in 10 years. Again, this has to do with the share price going down, but also the company's done a pretty good job of increasing those dividend payments every single year. We can see a 10-year dividend CAGR of 11.46% and a 5-year dividend CAGR of 10.34%, and the free cash flow payout ratio stayed in a pretty healthy range, sitting at about 41.3%. So overall, this looks pretty good. The dividend growth has been pretty solid. Now, what we need to discuss is why has the share price been down so much over the past year, and will the new CEO be able to fix that? So we need to back up a little bit and understand the story that's being told here. If we look at the past 10 years, we can see pre-2021, the stock was actually doing really well. Look at this, it goes from $43 per share at its peak all the way up to about $177 per share. And during this 2020 to 2021 period, the company decided it really needed to start focusing on online sales. And it makes sense why they would think that. But unfortunately, over the past few years, as Nike has shifted its focus to online sales through its website, other smaller competitors have been able to crack their way into the industry and compete with Nike. Think of smaller companies like ASICS or Fila. These are companies that have grown quite a bit and started competing with Nike with their online sales. And if we take a turn to see what they were talking about in their most recent earnings report, we can see that they stated, turning to their first quarter of 2025, they expect first quarter revenue to be down approximately 10%. That is a pretty large drop down. And why is this? They contribute a lot of it to challenges with Nike Digital. They haven't been so successful with this lately, but it does also have to do with a softer outlook in Greater China. A lot of companies are really struggling in China right now. Think about Nike, think about Starbucks. And keep in mind, China currently accounts for about 13.4% of Nike's revenue. So really, those are the two big problems for this company. We're looking at China and then the digital sales. The slowdown in digital sales has been a huge component of the revenue decrease. And as a result of all of this, we can see they said revenue for fiscal 2025 year, they expect it to fall by mid-single digits. That is not good news for the company. So investors saw the writing on the wall. They saw the problems going on in China. They saw their struggles with digital sales, and they definitely did not have faith in the management team with Nike, and especially the CEO. So they're hoping this news of a new CEO will spark the company. They're hoping this is someone who can get their brand back on the right track. And historically speaking, the brand has been really strong. We can see Nike has been one of America's favorite sneaker brands. If we look at this other chart, among American teens, we can see Nike has been one of their favorites. But over the past few years, the strength of that brand has been eroding, and we can actually see this with the valuation of the company. Now, how can we do this? Well, if we jump over to valuation here and scroll down, we can see if we look at price to earnings non-GAAP forward looking, right now, Nike has a 26.02 price to earnings. If we look at the 5-year average, It's sitting at 35.35, so I would consider that a company that trades at a premium. And previously, when Nike had such a strong moat, such a strong brand, some people would argue this was justified. But as their brand has eroded over the past few years, investors aren't willing to pay a premium for this company, and we've seen a decrease in the price to earnings ratio. In fact, if we look at the past year, their price to earnings ratio is the lowest it's been in the past 365 days. If we look at the past 3 years, we can see again the price to earnings ratio, the lowest it's been in 3 years. And if we switch it to the last 5 years, we get the exact same story. So I think one of the things you simply have to ask yourself as an investor is how much do you currently value Nike's brand? Because I think a lot of investors have decided it's not nearly as strong as it was 5 years ago. Now, if we start to dig a little bit deeper into the financials, let's go ahead and jump over to our stock screener. We'll come up here and plug in NKE and hit enter. At first glance, when we look at this, things don't necessarily look too bad. We can see revenue per share has seen decent growth over the past decade. Same is true with free cash flow per share and earnings per share. Now, earnings per share over the past 4 years, not nearly as much growth. It's fluctuated a little bit. We can also see they've been buying back shares. Debt to assets is in a healthy ratio. And return on invested capital has been pretty decent, especially in the past year at about 21%. Now, if we jump over to the profitability sheet and come up here and plug in NKE, we can start to see the narrative change just a little bit. Now, revenue over the past 5 years hasn't been great. It's been okay at about 5.6%, but we have to remember they expect first quarter revenue to be down approximately 10%. This is one of the massive problems, and the company expects revenue for the fiscal 2025 year to fall by mid-single digits. So it's not necessarily just looking at how they performed over the past decade that has investors concerned. It's the forward-looking guidance over the next year. So again, over the past decade, Nike actually looks like a pretty solid dividend growth stock. Investors were willing to pay a premium for this company because the brand was so strong, but it looks like that narrative has begun to change. So with that being said, what is the fair value of Nike? What is its intrinsic value? And to answer that question, we're actually going to take a kind of unique approach. We're going to look at a reverse discounted cash flow analysis. Now, if we're typically talking about just a discounted cash flow analysis, the idea behind it is we should be able to value a company based on the future free cash flow that it's going to produce. It tells us what the company is actually worth. But the idea behind the reverse discounted cash flow analysis is we can see how much free cash flow growth is the market pricing into the stock. So for example, right now we can see we have 0% free cash flow growth assumed. Right now, Nike's current share price is $86.12 per share. If we assume 0% free cash flow growth moving forward, we'd come to an intrinsic value of $57.84. So what does this tell us? Well, the market is pricing in free cash flow growth. That's what we would expect. So let's bump this up to around 3%. It puts the reverse DCF price per share all the way up to $71.64. So they're pricing in more than 3% free cash flow growth. If we bump this up to 4%, it gets to around $77 per share, and at 5%, around $82 per share, and if we bump it up to 6%, it gets pretty close. So it looks like it's going to be closer to around 5.8% free cash flow growth, or maybe even 5.7%. So as of right now, the market is pricing in around 5.7% free cash flow growth over the next decade into this company. Now again, we have to keep in mind, that's also with the market knowing the fact that revenue is likely to decline over the next year for Nike. If we jump back over to my profitability spreadsheet and look at revenue versus cost of revenue, we can see for the first time 2023, they generated around $51.2 billion in revenue, while in the next year, it was around 51.3, so not much of a change, but for the first time in the last decade, not including 2020, they're actually going to see a decline in revenue is what they're expecting in 2025. So the question you have to ask yourself when you're looking at Nike stock is, do you expect them to be able to grow free cash flow at a rate faster than 5.7% over the next decade? Because if you do, then you'd probably consider this a buying opportunity, and if you don't, then you probably want to stay away from the stock. If we look at one more valuation model, let's look at the dividend discount model. If we assume 6.75% growth rate to the dividends and a discount rate of 8.5%, we come to a dividend discount model price per share of about $90.28, which is just a little bit above the current share price for the company. Now, the last time I analyzed Nike, I felt like they were trading at a decent value, but they obviously had some problems up ahead. But with this recent jump up in share price, it appears they're quite a bit closer to fair value as of right now, in my opinion. I think a lot of the future success of Nike stock will greatly depend on how successful Elliott Hill, the new CEO, is in strengthening their brand once again. Because historically speaking, this has been a retail stock that investors have been willing to pay a premium for, but that's just not the case right now. So if you believe in Elliott Hill, if you believe in Nike and think the brand will be restored over the next few years, I would consider this a buying opportunity. And on the flip side of that, if you don't believe in those things, then probably stay away from the stock. The next year is definitely going to be bumpy, and in fact, if we look at the upcoming earnings report, that's going to be on October 1st, if we look at the earnings per share revision, they've all been downward. We don't have any upward earnings report revisions. So analysts aren't expecting this to be pretty. Again, the next year could be rough. But who knows, perhaps that could be an opportunity to be fearful when others are greedy and greedy when others are fearful. So with that being said, go ahead and let me know what you think of Nike stock in the comments down below. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.